Imagine standing on the edge of a cliff, looking out over a vast blue ocean. The wind is strong, the waves are crashing below, and you can't help but feel a mixture of awe and apprehension. That's a bit like the world of investing, isn't it? It's full of opportunities that stretch out like the horizon, but there are risks below the surface that we must navigate carefully. Today, I want to talk to you about understanding risk management basics, something that's as essential to your financial journey as a life vest is to a sailor. Risk in the world of finance is the cliff's edge. It's the unknown, the potential for loss, and the volatility that can make your stomach churn. But here's the thing about risk. It's not something to fear. It's something to understand, manage, and in many cases, embrace. Without risk, there's very little reward. It's like planting a seed. There's always the chance it won't grow, but the possibility of a flourishing plant is worth it. When we think about risk in investing, we're essentially considering the chance that our real return, the money we actually earn, will be different from our expected return. And let's face it, no investment is completely risk-free. Even the so-called safe assets like government bonds carry some degree of risk, albeit lower than, say, stocks or cryptocurrencies. But how do we manage this risk? How do we step back from the cliff's edge without missing the view? First, let's talk about diversification. This is one of the simplest yet most powerful tools in risk management. Think of it as the saying, "Don't put all your eggs in one basket." When you spread your investments across various asset classes, industries, and geographies, you reduce the impact of a poor performer on your overall portfolio. It's like having different boats in your fleet. If one springs a leak, the others can keep you afloat. Diversification doesn't eliminate risk, but it does mitigate it, providing a buffer against market volatility. Next, there's the idea of understanding your own risk tolerance, your personal comfort with uncertainty and potential loss. This is deeply personal and can change over time. Perhaps when you're young and just starting out, you might have a higher risk tolerance because you have time to recover from setbacks. As you get older, preserving wealth might become more important, and your appetite for risk might decrease. It's crucial to align your investments with your risk tolerance. Otherwise, you're setting yourself up for anxiety and stress. Investing shouldn't keep you up at night. Instead, it should feel like planting that seed with a sense of hopeful anticipation. Let's touch on the emotional side of investing. Fear and greed. These two emotions are like the tides of the investing ocean, pushing and pulling investors in sometimes irrational ways. Fear might cause you to sell in a panic when markets dip, potentially locking in losses. Greed might tempt you to chase after the latest hot stock, ignoring the fundamentals and increasing your exposure to risk. The key here is discipline. Develop a plan based on sound analysis and stick to it, blocking out the noise of market hype and doom. Think of investing like a marathon, not a sprint. It's about pacing yourself, staying focused on your goals, and not being swayed by the inevitable ups and downs along the way. Time itself is another factor in risk management. The longer your investment horizon, the more you can withstand short-term volatility. It's like sitting through a storm, knowing that clearer skies are on the way. Historically, markets tend to recover from downturns, so having time on your side can be a significant advantage. One of the most overlooked aspects of risk management is education. The more you know, the better equipped you are to make informed decisions. Investing isn't just about reading the numbers. It's about understanding the stories they tell and recognizing the patterns in market behavior. Learn from the past, stay informed about the present, and be prepared for the future. Knowledge is your compass in the vast sea of finance. Finally, let's talk about perspective. Seeing risk not just as a threat, but as an opportunity. Every downturn is a chance to learn, to adjust, and to reposition for future gains. In reality, Risk is the price we pay for the chance to achieve financial independence and long-term wealth. It's an integral part of the journey, not a detour. As you think about risk management, remember that it's about balance. Balancing your portfolio, balancing your emotions, and balancing your short-term actions with your long-term goals. It's not about avoiding risk, but about making it work for you. So as you stand at your own financial cliff, gaze out at the vast possibilities before you. Embrace the journey with courage, understanding, and a plan. Let risk be your ally, not your adversary, as you navigate toward the horizon of your financial dreams.